Fitch's Fixed Interest podcast delivers the analyst insights and updates you need to stay ahead in a rapidly evolving market.
Welcome to Fixed Interest. My name is Shelly Shetty. I'm a managing director in the Sovereign team. In this episode, which is part 1 of 2, we will be discussing the implications of USMCA moving into annual review cycles. To discuss these issues, I'm happy to be joined by Todd Martinez, co-head of the Americas and our primary analyst for Mexico, and Josh Grundleger, director on our team and the primary analyst for Canada. Starting with you, Todd, how important has USMCA been for North American trade? And also, can you walk us through what actually changed on July 1st? And just as importantly, what did not change when USMCA moved into annual review?
Sure. So I think US, Canada, and Mexico were bound to be important trading partners as big neighboring economies, but it's fair to say that NAFTA USMCA has brought them closer together. And it's important for all three countries in different ways. For Mexico, USMCA has really been the centerpiece of its economic model. Exports to the northern neighbors have risen from 10% of GDP a few decades ago to 31% last year, which is a very high number. In Canada, exports to its southern neighbors are 18% of GDP, also pretty large. And then for the US, export to these other neighboring economies is just 2% of GDP. That's low. But USMCA is important to the US in other ways. It's been important for affordability issues in the US. It's given the US manufacturing sector greater competitiveness by giving it access to some more cost-effective inputs. So what happened on July 1st? The no-deal scenario really preserves the status quo. The three countries just need to keep talking every year until they get to a deal, until 2036 when the deal ends automatically. So the good news is that means Mexico and Canada are preserving their preferential tariff access to the U.S. market. Right now, they face effective tariff rates of 3 to 4%, which is well below the levels that were put on the EU, Japan, and China. But the bad news is that this prolongs the uncertainty. 2036 seems like a long way off, but it's well within the horizon of businesses when they make their investment decisions. And that matters a lot. You know, NAFTA brought tariffs down on Mexico and Canada close to zero, but they were really only 2% beforehand, not that high. So the importance of USMCA is not just about tariffs, but about the predictability it offers. And, that incentivized the formation of supply chains. So if that predictability is lost, it's a challenge for these countries.
Thanks a lot, Todd, for your insights. And now over to you, Josh. Does Fitch actually have a baseline scenario on USMCA? And also, can you discuss a little bit about the possible scenarios we may be looking at going forward? What do you think will determine what scenario we may be confronting in the coming months or even years?
Yeah, so the move to annual reviews was within our baseline, which is essentially that the USMCA will eventually be renegotiated before the 2036 expiration, given the importance of the agreement, as Todd highlighted, to all three countries. However, the exact timing and nature of such a potential deal is less clear. There will be some key changes ultimately that impact certain rules and specific sectors in the final deal. But it's also important to note that the outcome is not necessarily a binary one, meaning that not all deals are the same. And there can be some agreements that end up more or less favorable for both Mexico and Canada. What's most important probably, though, during the process of negotiations is the level of uncertainty. There will undeniably be a level of volatility around it, depending on the timing and the political dynamics at the time. And ultimately, when a deal is made, the reduction in uncertainty, which weighs on the economy and investment decisions, will depend on how confident people are in the deal being stable and respected. Should it be reopened, for instance, after it's made, that will only serve to heighten the uncertainty that we see today. Other possible scenarios include downside risk that the U.S. withdraws early. This would require a legislative approval, and we think is highly unlikely. Second, the deal could be allowed to expire in 10 years, so that would mean annual reviews for the next decade, again, which seem highly unlikely. Finally, bilateral deals are also a possible outcome. Given the extent of the USMCA, we think that it's probably too difficult to renegotiate full deals with both Mexico and Canada separately. But bilateral deals could be sort of an add-on to a renegotiated USMCA.
Thanks a lot for your insights, Todd and Josh. If you want to hear more about USMCA, we have a part 2 of this podcast that will be following this one. Thank you.
Subscribe to Fixed Interests wherever you get your podcasts.